shitcoin.com show. The guys sit down with guests to chit chat about crypto. It's time for the shitcoin.com show. Let's all not get tracked.
Welcome to the shitcoin.com show, everyone. Today we're joined by Emin Gün Sirer, CEO of AVA Labs, and also associate professor at Cornell. Welcome, Emin.
Very nice to be here. Thank you for having me.
And as always, guys, I'm joined by Andreas.
Right. Hello.
He's always around on the shitcoin.com show. So we thought as well, we can kind of get into AVA a little bit later on in the show, but we thought it would be great to kind of kick this off by just learning a bit more about your background, Emin, and understanding like how you came into this crazy world of cryptocurrencies.
Sure. So that story goes back to 2002. So that's 7 years before Satoshi. And I was a young assistant professor. And back then, I don't know how many of your viewers remember, but the file sharing was the big thing. And on file sharing systems, we had this problem known as leechers. People would take things and they wouldn't upload things. So there was a dearth of people who were willing to upload files, and everybody wanted to download, whatever was around, but there weren't enough people who were seeding the networks. So one response to this was BitTorrent, and BitTorrent works on a basis called tit for tat. If you give me a block, I'll give you a block. So I looked at this and I thought, yeah, that's cool. That's barter, right? If we both want the same file, I can give you a block of the file, in return for a block of the same file. That's okay. That's what BitTorrent does.
And also, in BitTorrent, the person who receives the block, they can check that it's the correct one.
Yes, they can. They have a Merkle tree structure. They can check validity of blocks very fast. But the underlying problem in BitTorrent is you and I can engage in a good transaction only if we're interested in the same file at the same time. So imagine that I have a file that Blake wants, you have a file that I want. I can be nice to Blake, and but then I get no credit when it's time to fetch the file from you. And so what I do is I fetch my file, then I just drop off the network. There is no continued reputation. There is no accounting of how good I've been to the system over any length of time. So my idea was, hey, let's come up with something. And barter doesn't really work all that well. So I think we could do it better if we keep tabs on how good people have been using a currency. Now, of course, you can't have a centralized currency for internet files transfers of this kind. So we invented something called Karma, which was a decentralized currency that was minted with proof of work. So that's far before Bitcoin. I have the first implementation of a proof of work currency 7 years before Satoshi. Now, Satoshi doesn't know about this stuff. In fact, academics know about it. It's very well cited, that paper. But
which algorithm?
Which algo? Oh, it was SHA-1, I think it was.
Oh, really?
Might have been MD5 because it was pretty early. I'm not sure if it was MD5, but I didn't have the consensus protocol part that Satoshi came up with. So he added something on top of Karma 7 years later, and I didn't pursue it because of a bunch of factors. But the main one was all these senior professors came to me and said, "Look, this file sharing stuff, this virtual currency stuff, it's all fine and good." But you might have noticed that 9/11 just happened, right, the year before. And everybody is concerned about terrorist financing. So you're not going to get a dime of funding for this kind of work. And they were right. So that work kind of just lay dormant for a long time. And it was up to the 2008 crash and up to Satoshi to bring it back, roaring back. And he showed us all what could be done. And in fact, he opened a big new, I think, area, right, by showing that all the consensus protocols that had been used before him were what we call classical protocols, were just not suitable for use in an open internet, for use in a permissionless setting. So So anyway, so then Satoshi came, and so when Satoshi came, I took a look at the protocol with Itai Eyal. He's a professor now at the Technion, and Itai and I were like, okay, well, this looks like a cool protocol. Like, he's got a bunch of cool ideas. Let's see if his claims hold up. And what's his main claim? Well, he has a bunch of claims. In fact, all the core developers were repeating these claims as if they were gospel. And the main claim is, the system is safe as long as a majority of the miners are honest. And a secondary claim is, you make money in proportion to your hash power. This is critical. And a tertiary claim is, by combining and recombining our hash power, we can't cheat the system. So if you have, let's say, Andreas, you have 10%, Blake, you have 10%. If you guys combine your forces, you'll have 20%. There's no value to combining your forces. There's very little value. It's a minute effect. So these were the three claims that everybody bandied about in 2012, 2013 or so. And when we looked at this carefully, we noticed that all three of these claims were wrong. And so we wrote a paper called Selfish Mining that showed how if you don't follow what Satoshi told you to do, and you do mining in a different manner, then you can make money far more than your fair share. In fact,
like producing empty blocks, or?
No. You don't produce empty blocks. Here's what you do. Here's the selfish mining trick. This is counterintuitive, but nevertheless, it works. And there's a funny story about what happened after we made it public. So here is what you do if you follow Satoshi, right? So Bitcoin mining, all three of us are miners. Andreas, you find a block, you tell all of us. Blake says, oh, Andreas, thank you for finding a block. Let me cooperatively build on it. I say the same thing. And we cooperatively extend the blockchain and we add these blocks. And the system self-adjusts so that blocks are coming at an average of a block every 10 minutes. So far, so good. But if I'm a selfish miner, I don't do this. I say, screw that, right? I found a block, it's in my hand. And if I were following Satoshi, I'd tell you guys, and then you'd build on it and I'd get my reward. I'm not gonna do this. I'm a risk-taking kind of guy. I'm gonna take this block, put it behind my back. Okay, so now I have a block behind my back. And there are multiple cases. So this system, it's kind of like a winning strategy at blackjack. It tilts the odds in your favor. And in expectation, we'll come out ahead. But on any given block, I might lose money. But on average, I'll come out far ahead. But let me show you how it works with a particularly easy case. So I had this block. It's now behind my back. We're in a funny situation right now. I know the solution to the next block. You guys are trying to come up with an alternative solution, but I'm a little ahead of you. You guys just don't know it yet. You're working on a stale problem. You just don't know it yet. So in one case, the easiest case, I find another block. Now I have two blocks behind my back, okay? Both on top of each other. And now if Andreas, being a nice guy, he finds a block and he tells us, he says, hey guys, I found a block, please take it and build on it. And I, being the selfish miner that I am, that's when I come out and say, Andreas, thank you for working really hard. Well, I got two blocks right here. I have just orphaned your block. And I can do this all day. And every time I do it, I will knock out your blocks and I will come to dominate the blockchain with my own blocks. And after a difficulty adjustment, I will end up making far more money than my fair share. Yeah.
But isn't this solved by spy mining? Because all miners are spying on each other by connecting to each other's mining pools. So you'd have to be a solo miner.
Exactly. Spy mining is one thing that actually addresses this. So if you're an open pool, and I can spy mine on your pool, and I can discover when you've found a new block, I will discover its hash. Exactly right.
But if you have an entity that's maybe not a huge fan of BTC, like kind of like an end chain thing, maybe.
Yeah.
Then maybe they could do this, lose a little money, but no spy mining, just to spite the system, right?
Right. Or if you wanted to mess with a coin, especially a minority coin, a minority hash coin. So if you want to get under, Craig Wright's bonnet, you could go to BSV, and the numbers work out like this. So it's going to be a pretty steep curve. If you have 10% of the hash power, you make about 11% of the block rewards. So that's good. If you have 20% of the hash power, you make about 23%. So if there are two of you guys, both with 10%, it actually pays to combine your forces, which is a terrible
I see.
mechanic. That kind of sucks. And so 23%, that's kind of okay. But the best numbers happen after 33%. So at 49% of the hash power, you make about 100% of the block rewards. You knock out all your...
So you need less than 50%.
Yeah, it's really interesting. So you could launch all kinds of attacks with this. The amount of hash power required to take over a blockchain is actually far less than what people think. And anyway, so we made this public, and I got a lot of attacks. People attacked me left and right, death threats, terrible insults, and so forth for like a period of at least a week. And it was really funny before we made, well, whatever. Anyway, so we make it public. We get all the abuse from the Bitcoin, the Bitcoin, the early OGs, I guess. And then they decide, okay, we're going to crowdfund a simulator to show that, that these academics don't know anything. So they crowdfund a simulator. We, of course, have a simulator. Plus, we have the analyzed, the whole thing characterized with math. So we're like, Itai is like, hey, Gün, we've got the simulator. We could just give them the simulator. I was like, look, let's just play it cool. They don't trust us, obviously. Let them do their own thing. So there were multiple simulators built. Every single one of them vetted exactly what we found. Every single person who wrote a simulator came away saying, yeah, they're right. And this thing works exactly the way they say it works. And so that was my foray into Bitcoin land, specifically. And so I went from the most hated man for a little while to, they started inviting me to their events and conferences and so forth. And I took an interest in the area. I love crypto. Bitcoin is actually a very cool system as well. And I spent a lot of time improving various different aspects of it. So I worked on Bitcoin covenants. I worked on making cold storage safer. I worked on contract safety. Oh yeah, I was there when the DAO hack happened. So I found a bunch of flaws in the DAO. The DAO hacker used one of the flaws that I found with Vlad Zamfir and Dino Mark. There were three of us on that paper. We wrote a paper that was titled "A Call for a Moratorium on the DAO." Kind of prescient.
I think I've read this.
Yeah. So we had to make that paper public because the DAO has like these time periods, right? It collects money for 4 weeks, and then it goes on to a second mode. And so we had to make it public before the 4 weeks were up. So I made it public, and it had 6 bugs in it, 6 bugs that we had found. And I'm literally typing in real time into a Google document. And you know how like when people are looking over your shoulder into the same document, they come up as animals? Yeah, aardvark, beaver, camel, whatever. I had hundreds of those people where my cursor was. It's like number 7, here's another bug. We ended up finding 9 bugs. I actually also called out the reentrancy bug to my graduate student, but we decided somehow erroneously, we thought that it couldn't be exploited, and we were wrong. And that was the main bug that the hacker used. And anyway, whatever. So I've done a bunch of work in this space. I worked on layer 2 solutions. I built the fastest layer 2 for crypto. I worked on Bitcoin next generation, Bitcoin NG, which is used in a bunch of coins. It's used in Eternity and a bunch of others. I don't know, Waves, it's used in Waves. So I can go on and on. I've done a bunch of work in this space. I worked also to get lawmakers off our backs. I think next to Coin Center, I am the person who has briefed the most number of politicos on Bitcoin and cryptocurrency and how they should lay off because there's great innovation happening here, which there is. What else have I done? I don't know. Oh, yeah, I went around trying to get my colleagues in other areas to look into verification, contract verification. And I'm happy to say that that area has come into crypto. So I have a lot of other colleagues now looking into how to vet contracts, how to verify them. That's my short backstory.
SideShift.ai.
And yeah, I want to get into that more later, because I ask a lot of people we have on the show about how do we make smart contracts, the software, how do we make that as safe as the software that runs in an airplane or in a space shuttle, or the system that controls the power that goes to your house, like all these things, because we know these systems are not written in Solidity, even those of us who are not academics, but you can get into that later.
Yeah. So yeah, no, contract safety is critical. It's something that everybody needs, and we need to bring heavier weight tools into it. I think that people are coming in with much better tools. Very happy to chat about what's on the horizon from the research area.
Very cool. Very cool. I guess this nicely segues into, you've talked about how you got into the space, but how did you end up moving on to Avalanche with AVA Labs? How did that come about? And yeah, tell us more about that.
The origin story of Avalanche, the protocol. So we'd been working on lightweight consensus protocols for some time, maybe 2.5 years. So this got started because I was talking to Vitalik and Vlad about ETH 2.0 way back when, maybe 4 years ago or so. That would be 2016 or so. No, 2015. It was just around the time when ETH was starting up. We were beginning to talk about ETH 2.0, and I thought, okay, well, everybody's going in one direction, but I wonder if we can get a lighter weight protocol, and so we had some insights and intuition about how this might work, and I was trying to get the math right, and fast forward to 2018, and we got contacted by an anonymous team calling themselves Team Rocket. And Team Rocket gave us a paper with proofs in it for exactly the kinds of protocols that we were working on. So for those people who are sort of interested in this area but don't have an academic background, let me summarize this area. It's very simple. It is not like economics, which is a 5,000-year history. It is not like other areas that have been around for hundreds of years. Distributed systems has been around for 45 years. That's not a long time. In that time frame, there had only been 2 approaches to consensus. One is what every academic worked on. It's called classical consensus. And in classical consensus, we have a small number of validators, no more than 100 or abouts. And they ascertain that they all make decisions as a unit. And they do this typically by talking to everybody else. So all those protocols have this n-squared feature. Everyone talks to everyone else.
And that's sort of what we use today for a normal database. Like if somebody's running like MySQL or Redis or anything out there, they usually use these, often something called Raft, but that's just like everyone talking to everyone.
Exactly. Raft is a crash fault tolerant consensus protocol. There are Byzantine fault tolerant protocols like PBFT, which is used in Tendermint and Cosmos. So there are signature accrual protocols based on quorums that are used in EOS, that are going to be used in ETH 2.0. This is all old school stuff. Hyperledger Fabric. If anybody has ever done a permissioned blockchain, they probably use Hyperledger Fabric. It's a safe choice. It's a boring choice. And, it kind of works because, it is classical. These protocols don't really scale. They don't really work all that well. And most importantly, they're closed, right? And they're very, very, very fragile. If you try to make them open, then you're going to get failures. EOS had a failure, I don't know, a month and a half ago, prior to the virus event. They were down they had a big problem. Ripple had problems. These systems are super fragile.
Ripple always has problems.
Well, you talk to Vlad, Stellar had problems. You talk to Vlad Zamfir, he'll tell you, look, I expect ETH 2.0 to have consensus failures. This is something we expect. So anyhow, so that's classical. And classical protocols do not scale. They're not open. They're super fragile, but they are efficient. There's no mining. There's no electricity wasted. And then in comes Satoshi. Satoshi knew about all this stuff, right? And the people who invented this area, there are two of them, Barbara Liskov and Leslie Lamport. They both have Turing Awards, the people who came up with classical protocols. And for the longest time, like it had become so bad, this classical space. You could become an academic. You could take an existing protocol and slightly tweak it and publish a paper. So there are hundreds of these crap papers. It's kind of like the white paper inflation that we had. So people were coming up with stupider and stupider protocols. And the bar for becoming a BFT expert was very, very, very low. Anyhow, Satoshi comes in, looks at this and says, look, everything that you guys worked on, that the academics, it's fragile. It's not suitable for use in a robust setting. In a demanding setting where people are Byzantine in the wide internet. And he comes up with this protocol, which is brilliant, huge breakthrough. And it gives us Bitcoin, it gives us the shitcoin storm that came after that. So that's great. Except now we're beginning to see problems with Nakamoto consensus, with proof of work. What are we seeing? It doesn't scale. It's slow as hell. It takes an hour for a Bitcoin transaction to confirm properly, right, to become finalized. It is incredibly centralized. There is one major player in Bitcoin, Bitmain. They manufacture all the rigs. You want to be a player in Bitcoin, you're going to have to be in bed with Bitmain. And to the extent that Bitcoin is decentralized, it's because of heroic efforts by Jihan Wu at Bitmain. It's because he's distributing the rigs evenly to people. But it's really centrally managed. And at the end of the day, how many mining pools do we have? Last I checked, there were about 19 of them. 19. We make fun of EOS for being a cartel at 21 block producers. And then we look at Bitcoin, it's got 19 producers. It's like, what the hell, guys? Like, and you paid a huge price for this. Like we got into that stupid block size debate. We got into a whole bunch of other issues just to create decentralization. And what did we get? Something worse than EOS. What the heck? So anyhow, so that's where we are. Not to mention, I should mention this. We're melting the polar ice caps. That really bugs me. We're killing the polar bears. That bugs me. It doesn't bug everybody. This area is full of crazy libertarians. They're like, oh, I got mine. And that's okay. But did you really get yours? You're paying $5 billion a year to these guys. Your store of value, which by the way, just got proven to not be much of a store of value, but your store of value is just a leak. It's a sieve. It's leaking money to these people. And the power company is the only one who's actually making mint at the end of the day. And everybody else holding tokens in their hands, they think they're rich on paper, but they really aren't. So there is a really funky thing going on with that entire process. And anyway, so this is kind of terrible. So where are we? So we're at the end of 42 years of distributed systems research. We had classical protocols, hundreds of them, and you see them resurrected today in the form of ETH2O and so on. And then we had proof of work protocols, which you saw also. And then suddenly in comes Avalanche. So Avalanche is a ginormous breakthrough of the same magnitude as Leslie's work, as Barbara Liskov's work, and it's of the same magnitude as Satoshi's work. It's an entire new family of protocols. It works differently. It scales much better. It's efficient and quiescent and green like classical protocols, and it's robust like Nakamoto, and it scales like no other. It scales better than both. So anyway, we had an intuition that these protocols were very strong. Then we got the proof from Team Rocket, and that then led us to say, hey, this is really cool stuff. Let's build an entire system around it. Let's show the world how this blockchain stuff ought to be done. So I created AVA Labs. I'm very happy to talk about the vision there and where we're planning to go. But the main impetus for it was, I'm sick and tired of hearing people who know nothing talk about, consensus protocols, this, that, and the other. But sick and tired of hearing Justin Sun make a whole lot of noises and not introduce technology to back them up. So I was like, let's show the world how this stuff ought to be done. And so we started out with the base platform, and that's AVA, the base platform.
And for someone whose background is in this space, my background is Bitcoin, and then I looked a lot of Ethereum. We make this because there's so many copy pastes everywhere. We usually just describe any blockchain project. It goes like, is it proof of work or is it proof of stake?
Right.
Or it can be hybrid, which means it's the worst of both.
That's the worst of both. Exactly.
Yeah. And we say, well, then it's usually about how the coins were allocated, but that's a different one. And then we usually separate, and is it UTXO based, which means you can chain transactions together, or is it account based like Ripple and Ethereum, where you cannot really make one thing dependent on another?
Right.
Do any of these ways of distinguishing, do any of these work with Avalanche, or is it just too different?
No. All of those are valid questions. So let's take them one by one. The first thing, one of the first things is proof of work versus proof of stake. So when we were doing this, when we were looking into these protocols, I noticed that everyone was confused on this front. They thought proof of work by itself was a consensus protocol. They thought proof of stake was one consensus protocol. So neither of those are true. Proof of work is a Sybil control mechanism. It's the mechanism that I use to make sure that you have as much voice as your hash power and no more, right? If I were to try to build a system where everybody gets a vote, Andreas, being the bright guy that he is, he would say, hi, I'm Andreas, and I'm Andreas prime, I'm Andreas double prime, triple prime, and he would create 1 million of Andreases, and then he would have 1 million votes, and then he would be able to double spend. So we need to control this somehow. And Satoshi tried to control it by using mining, by using proof of work. And other protocols try to control how much voice you get by using coins, proof of stake. So these are two mechanisms. You could also have closed systems. So if you've ever heard of permission systems or consortia blockchains, they are using proof of authority. So I designate, IBM and Merck as being authorities, and they keep my records. That's also possible.
That would be like EOS, Ripple, Stellar, and Blockstream Liquid.
Exactly. Blockstream Liquid would be there. Stellar would be there for sure. Ripple would be there. Exactly. So so these are all Sybil mechanisms, and Avalanche is the consensus protocol underneath. It is the mechanism that the nodes use to achieve finality. You could couple it with either of these things. You could mint with proof of work and then achieve consensus with Avalanche, or you could mint with proof of stake and achieve consensus with Avalanche. So it's applicable to both. AVA, the coin that we're building, is a proof of stake coin. It is a system designed, it's not just for AVA just by itself, used by itself. We are not trying to compete with Bitcoin. We are not trying to compete with the US dollar. What we built is a platform for creating other digital assets. We're also not competing with Ethereum. We are not trying to make a world computer. So this is literally an entire ecosystem solely for creating assets. And it does a lot of things differently, but at its core, it uses proof of stake to participate in the system. So people will have to have AVA to participate in the protocol. They'll be rewarded with additional AVA for participating in the protocol. So that's
the proof of stake is like how you get a say.
Exactly. In AVA, the coin, the underlying coin. Now you can build other coins on top. So you can create like, A coin, Andreas's coin, A coin. And an A coin could be also proof of stake. And then B coin, Blake's B coin, could be proof of work minted, but Avalanche decided. So when you see a transaction, you perform the Avalanche action on it to come to agreement on Alice paid Bob. But you'd be using proof of work for minting the Blakes, the new B coins. And so it's a very versatile framework. So if you wanted to take BCH and you wanted to protect it against double spends, and you wanted to give assurance to zero conf, what they call zero conf transactions, you could do that on Avalanche. So that's one of the things that we actually targeted. So it's applicable to both. AVA, the coin itself, is going to be using stake, and we're doing a bunch of things to make sure that that the sort of the ecosystem is powered by AVA. You know, it's like there's got to be some economic incentives. The AVA coin is used for incentive alignment, in essence. And yeah, so that's the system. So what else did you ask? Let's see, proof of work versus proof of stake. My answer is it supports both. AVA uses stake, but it enables other people to issue coins that use proof of work if they so choose on top. Coin distribution.
Yeah, I mean, coin distribution isn't very interesting. But I was thinking, is it, you know, anybody that tried to work with Ethereum finds it to be very difficult because it's account-based. The same as Ripple.
Yes.
So, like if I want to send money to Blake and then money to Emin, if I attach too low of a fee to the transaction going to Blake, then I cannot send you money before I worked out the Blake money first. And as an individual user, it's quite confusing. But if you're a business or an exchange or a payment processor, it is way beyond confusing. It is, it's an enormous challenge.
I imagine you guys dealt with this at SideShift.ai. I mean, this is really a big problem, right? For anybody running a real business using crypto, it's a huge problem.
It's very, very difficult.
Yeah, I've built a bunch of services. I've been there, you know, like you wake up and stuff has been stuck and people are going crazy and so forth. So I'm happy to say that AVA is UTXO based. So I love UTXO. I love the UTXO model. Satoshi was brilliant for coming up with that as well. So yeah, and the way they are consumed is fantastic, and it gives us a whole bunch of advantages. So yes, you get all the benefits that you mentioned. In addition, you can prune your history, right? So if a UTXO is spent, it's spent. You're done with it. You don't have to keep it around forever. Whereas with accounts, every account must be preserved forever. You know, it's just really hard to deal with those things.
And on Bitcoin, if you were to store only a list of all coins that someone has not spent, I think that only comes to like 2.5 gig.
Really, that's nothing. That is absolutely nothing. So
I might be wrong, but we'll see.
Yeah, I wouldn't be surprised after 10 years of. I mean, that's after 10 years. I bet you the summary information is not that big. And so yeah, no, AVA builds a DAG. It doesn't build a chain. It builds a complicated, what we call a directed acyclic graph, a giant graph of expenditures. And any portions of the graph that have been spent and are no longer in use, you can just disregard. So what you care about is the live edge of the graph, the edge where new transactions are, and the past unspent UTXOs that are inside the DAG. Everything else you can safely delete because you don't care. You do need them for verification, but once verified, you don't have to store.
And yeah, I think in editing, we're going to throw up like a diagram, and it'll be what computer scientists mean when they say graph. And it's not like a stock price going up and down.
Oh yeah, it is not the stock price going up. It's not.
We'll post a graph. Go on.
Right. It's like yes, exactly. I actually never thought of the other way. You're right. Every time somebody says graph, I think of the computer science.
Okay, so yeah, so it's either proof of work or proof of stake, doesn't matter. Because that just gives you a voice. Yeah. And then the consensus algorithm called Avalanche on top decides actually what you can say with that voice and what other people, how they interpret that information to reach consensus.
Right.
And it's UTXO based, so it's UTXO based, so you can do all the fancy, crazy things like making transactions ahead of time and just storing them in a vault somewhere, but building things on it and go kind of crazy.
Absolutely. No, yeah, you can, yes, all of those tricks. Child pays for parent is easy and trivial and something we support. Yeah, no, all of the standard tricks that apply to stacked UTXO transactions apply to Avalanche.
Shift with SideShift.ai. Good job.
I was going to ask, so, you know, all this crazy stuff you guys are putting together, and I know you've been doing a lot of efforts to pull in engineers to actually work on this stuff. So yeah, how have you been solving that problem and getting people involved in Avalanche?
So, you know, that's a great question, because for any coin to succeed, the most important thing is community. And, you know, and we've even seen that it doesn't even matter if it's toxic, right? You just need a community of noisemakers. So what did we do? We actually, as a company, as a group of people who started the project, we were in stealth mode. We worked secretly on the code for a while. And that wasn't the best thing for creating a community. Yet, despite that, everybody who's technical, who read the Avalanche paper, got very excited and wrote to us and said, hey, I want to be involved, I want to see what you're up to, etc. So there's been a lot of ground up interest in this project, just solely based on the technical interest alone. So that's been in our favor, even though we were not actually public with the code. But much more importantly, we made the code public as of 3 weeks ago. So now it's all fully open source and anybody can take a look. And then to further incentivize involvement and to also shake out any bugs and so forth that might be in it, we announced a bug bounty. And I did it in a very funny way. We also employed a professional firm to find bugs in our code. And so everybody does this, right? This is normal. But what we did was we went to the firm that's doing this professional auditing, and we said, well, look, we don't know how good you guys are. How about we structure the deal this way? We pay you half the amount that we're supposed to pay you. We embed a small number of bugs in the code, and if you find them, then we'll pay. But if you don't find them, then it looks like maybe perhaps your bug finding wasn't all that good, and we don't pay. So to our surprise, they were so confident in their abilities, they said, sure, we'll go with that. And then we thought, hey, let's do this for the public release as well. So there are 4 embedded bugs in the public code. And so we know
and
those
it's up
bugs.
to 50K.
And they're up to 50K. You know, so we'll see who finds them. And so anybody who finds them, you know, I don't care about the money part. I wouldn't have cared when I was a grad student. But if they find them, I will personally write you a message that says, you know, you are freaking brilliant, because they're not easy to find. They're bugs that we have to fight. And so we're beginning to have some people sort of slowly encroach on them, I think. And anyway, so that's one of the things we're doing. What else are we doing? I don't know. I'm talking to people, you know, and I'm trying to get other people to talk about Avalanche as well. I have a lot of engineers. They've been busy, so they haven't had a chance to go out. I've been the face of the project, but it's really not me. Like, the hard work is done by a group of 30 plus brilliant people. So we're a company of 32 or so at the moment. At these numbers, it becomes hard to count precisely. So we might be 33 today. So anyway, so yeah, we are a group of 33 people, and mostly very young, very brilliant, very, very energetic folks. I'm just a mouthpiece at the front here. Yeah, we'll get them to talk more to people, to the community. And, you know, if anybody's excited about this technology, where are you going to go? Like, what are you going to do? You're going to go and, I don't know, I guess you could always, whatever, you know, you could go help Justin with Tron coding or something.
You could do us all a favor and go make lightning work.
I'm not touching that entire area. You know, I did T-Chain. I built the world's fastest layer 2. And then I thought, hey, we could have a company around this. Then I thought, what's the point? You know, there is no money to be made. There's no money to be made with Blockstream's Liquid. And there is very little money to be made with Lightning. So power to Elizabeth, whom I happen to like very much. She's a principled person and a nice person to work with and talk to. Liquid is what it is. The only surprising thing about Liquid is, why was it so late? Like, why did it take you so long to deliver so little? I'll never understand that part. But anyway, so power to them. There's no money at layer 2 at the moment.
Interesting. And you guys as well, in terms of like, I know you've been quite aggressive with your roadmap, right? Because when did AVA Labs kickstart? It was not too long ago.
It was Feb 19, so February 2019, about a year and a month ago. So within a year, we delivered the working product. And we have a second working product to come after the mainnet launch. So this is kind of funny. Like, we should talk about this a little bit. There are a lot of coins, right? 2,000 coins out there. And one of my biggest difficulties is trying to rise above the noise. Everybody makes the same noise. Everybody has a consensus protocol. Where the hell were these guys when I was learning about these consensus protocols? I never saw any of them. Where did they come up with these protocols that they claim to have invented? Where's this crap coming from? Well, there's coming from the age-old papers we all know, okay? So what they do is they just go back and dust up some old classical protocol, and they serve it to the masses with some lipstick on it. What the hell is Hedera hash graph? It's PBFT done badly. It's strictly slower, and none of the claims hold up, right? And I would love to post a graph, the other kind of graph, of claims over time, throughput over time. It's an exponential drop-off. They claim to be doing 1 million transactions per second. Then in like 6 months, they went down to 500,000. In another 4 months, they went down to 100,000, which was great. And ultimately, they delivered something that does a few hundred transactions per second. This is crazy. You talk to anybody else. I'm not going to name names. I could, but I'm not going to. There are a crap ton of coins out there. You ask them, how many transactions can you clear? They say, 1 million. Okay, what's your backend database? Well, then they say LevelDB. And then you go, LevelDB, that's the same database that Bitcoin uses. That's the same database that Ethereum uses. I have benchmarked LevelDB. There is no way you're getting more than a few hundred transactions per second on LevelDB. It ain't happening for you. It's just not possible. So everything you must have said publicly is a lie. And there's a bunch of this going on. So for example, for AVA, we haven't made this portion of the code public, but we developed our own backend database to break through those barriers.
And the reason for people who aren't really into LevelDB and its history, LevelDB is a key value database that is used by Bitcoin, and because of that, it is also used by everything else for no reason other than that it was sort of working for most of the time at Bitcoin, but no one ever claimed it was a good database to use for the kind of data we have in blockchains.
Absolutely. It was originally designed by Google to store your bookmarks. That's LevelDB's background. And if you're going to have a few hundred bookmarks, that's great. And then people started repurposing it for a whole bunch of other reasons, of other use cases. And now here it is at the root of a whole bunch of blockchains. So yeah, it's a slow database. You can do far better. And blockchains have access patterns that are unlike your browser and unlike everything else. So you need a custom tailored database. And so that's what we have. That's how you get to these high numbers. And, as I said, power to other people, but there's a lot of lying and a lot of scamming going on in this space. I was going somewhere with this. I forgot where I was going. So it's a sad state of affairs. There's a lot of people out there. They dust up old protocols and they serve them to you. There's a lot of people out there who outright lie about their performance. And we can talk about how they lie as well. This is a pet. I like looking into scams of all kinds. That's like a hobby of mine. And that was one of the draws for me getting into the Bitcoin space, because Bitcoin
because you'll have infinite amounts of things to look at.
Exactly.
There's levels of scams. There are tiers of scams on scams.
Exactly. It's fractal. As you go deeper, you find another scam. You look into Quadriga, and then Tucker Carlson comes out, and you're like, what the hell? How did Tucker Carlson get involved with Quadriga? And how am I talking to, whatever, like friends about, well, whatever. It's been crazy. The whole space is pretty nuts. So let's see. So here we are. We're trying to distinguish ourselves, and so the main ways in which I think anybody can distinguish themselves is just by sheer strength of the technical work underneath. We haven't been making all that much. Well, I don't know. We should make more noise about it, actually. But technically, we're very different from everyone else. And as a company, we have a vision that's different from everybody else. I am, as I said, not trying to compete with Bitcoin. I'm not trying to take down the hegemony of the dollar or whatever. And I'm not going to, reinvent how money is transferred, etc. That's not going to happen for Bitcoin, I think. I mean, I would like it to happen. That'd be cool, maybe. But I don't think it's going to happen. So then, and I'm not trying to compete with Ethereum either. Ethereum, it's a great experiment, but it doesn't really have a particular target. It's a general experimentation platform is what it is. And there is great experimentation happening on top. But the underlying platform, in my opinion, after having looked at it carefully, it's not suitable for any purpose, especially the purpose of issuing digital assets. So if you want to issue a digital asset, the platform to use is AVA. AVA has some main features that distinguish itself. One of the main ones is it's a multi-VM platform on which you control the stakers, the validators. Let me open that up a little bit. Okay, everybody else copied the entire model from Bitcoin. They just took what Satoshi did and added like a little bit on top. So what's that model? You have a coin, one coin. You have one virtual machine that defines how that coin moves. And then you have a network that you don't control that implements that VM. And that's it. You want to make a change to the VM, you have to get the buy-in of the network. You have to convince Luke Jr., who's part of the network, to agree to run your new amended block size or what have you in the nodes that he's got in a Florida swamp, and he's going to say, no, I don't have enough. Right? So good luck to you. It ain't going to happen for you. So that's what people are doing. What do you do then? Well, you sit, you put your shills on Twitter, you sell your coin to people. That's the one proven business model. One of the two proven business models in crypto is you sell tokens. So you shill the token, and you spend your days doing that crap. That's not what AVA is about. Sure, AVA has its own token, but that token is there to facilitate the creation of other tokens. So we envision a world with thousands of new different tokens corresponding to different kinds of digital assets. For each token, you can specify a particular virtual machine that defines how that token behaves inside the network. And so that is something maybe you could do with Ethereum, because Ethereum is programmable. You could come up with your own set of rules for your token. Well, you do it in AVA by defining a virtual machine. But on top of that, and this part is crucial, you get to determine the set of nodes that participate in validating your asset. Now, what does that mean? Well, it means I can do the following. I can say, look, guys, I'm going to issue a purple coin. Purple coin is going to correspond to fractionalized real estate in Brooklyn, which is where AVA Labs is. And it's going to have special rules, right? Because it's real estate. You can divide it, you can merge it, etc. And most importantly, in order to be a validator for this real estate transaction, you have to, and now I can fill in the blank. I can say something like, something I cannot express in code. What can I not express in code? A resource requirement. I can say, you have to have 16 gigabytes of RAM, okay? We're going to have really large contracts or a lot of state. Or I can say, in order to be a validator for my coin, you have to preserve the records for the next 50 years. Now, when you're validating my coin, you know exactly what you're doing. It's not just a hash to you. It is not just bytecode to you, unlike in Ethereum. You know that you're becoming a validator for my particular coin, which is a first-level abstraction in the AVA network. This is unlike Ethereum entirely. It's a very different approach to life. And so you can say, okay, Gun, I'm going to come and join your network and validate your real estate transactions and archive them, but I demand I demand fees commensurate with the service. It's expensive to archive things for the next 50 years. And you can do that. The fee structure is different for each coin on AVA. You can say, I want to be paid in a stable coin, and I want to be paid hundreds of dollars because I'm going to be archiving this stuff. And you can express other stuff as well. You can say, you have to be within the US jurisdiction. You have to be outside the US jurisdiction. You have to put up a huge bond. You have to sign a particular agreement. Whatever it might be, it might take to become a validator for this brand new coin that we invented, the purple coin, we can specify. So this vision was not at all anywhere to be found in the crypto space when we started. Almost all of the 2000 coins, maybe with the exception of Cosmos, is in the category of having copied Bitcoin in this regard. AVA is really different from the ground up, and it has a different incentive structure and a very different technical foundation, and also legal foundation. So this allows us to go to big companies and say, hey, whatever, I'm not going to name names. We noticed that you want to issue a coin, you want to do it in a compliant manner, you want to control the nodes that participate in your network. Well, here is how you do something in between permissioned and permissionless. You want to say, you just specify what it is you want the nodes to possess or sign or agree to, and then we can create a network for you on top of AVA. And then these purple coins become atomically swappable, transferable, and interchangeable with other coins, yellow coin, red coin, green coin, etc., all built on AVA. And the vision for AVA, the ecosystem, is not just the platform, but also to build additional services on top. So we're very excited about DEXs, for example. So one of the new exciting things coming down the pipe from us is a new kind of DEX that's much better than the DEXs that you might have seen from Ethereum.
Mm. And say like the ECB came to you tomorrow and said, we want to have euros, at least some euros, on a blockchain, but we tried Ethereum and it's a little unreliable.
Yeah.
And we don't think that Bitcoin is flexible enough.
Right.
Then how would it look as like them setting it up, and what they would work with you, and what would it look like for me who would just want to hold these digital euros in a wallet of some kind, like on my phone?
Fantastic question. So the moment that they have decided ECB has decided to issue digital euros, issuing this will be something that takes on the order of about an hour, completed by somebody non-technical. Ideally, a lawyer is the use case we have in mind, and it should take them no technical effort, no code writing whatsoever, and they just go to a website, follow some wizard essentially, and the wizard has them create the coins that they need, that they want to issue. And in fact, we have some tutorials that are targeted at programmers at the moment, and we're building the front end so that this vision can be a reality by the time we go mainnet. So that's what we're doing. They get to determine. So the beautiful thing about AVA is that it is designed from the ground up for having a gazillion different assets on top. If you are looking into AVA itself, and if you are capable of holding AVAs, you are also capable automatically, you can't escape this. You're also capable of having other coins. AVA is just one coin on the system. It's just got some hash. I don't even know what its ultimate hash is going to be. It's not even the number one, right? It's just a hash. There'll be many other hashes. And so yeah, they create a coin that they get their little hash that is the unique identifier, and then they issue a bunch of coins with that hash. And it's that simple. And for you, you'd hold those coins in your AVA wallet alongside your AVAs, if you have any. You don't have to have AVAs. And you can hold some digital euros on your phone, and you can transact with them. That's very much the vision. One of the main things that's driving me, Andreas, is not so much stable coins. I love stable coins, by the way. So we've made partnerships with a bunch of different people to have them issue their stable coins on AVA. So that's exciting. But the thing that drives me are alternative assets that are not currently in digital form. So think about the world's wealth, okay? So there's a bunch of money out there, and Bitcoin is trying to become that money, but except they realize they're not really getting there. And so, but there's a lot of other things in the world. And so what are those things? Well, there are a bunch of people who are trying to do the obvious. They're trying to represent equities as digital assets. Power to them. I think that's also worthwhile. We want that to happen on AVA, but that's hard to do. But there are alternative assets. These are things that are way out there, that are not in digital form. So what form do they take? Income sharing agreements. I want to be able to trade these. I want everybody to be able to trade these. Fractionalized real estate. This is really exciting. I want to be able to open up, like there are a gazillion countries, each and every one of them wants to open up their own real estate to overseas investors. But it's very hard. It's very hard to be the sole owner of a property. Say, Singaporeans, I'm sure, would like to put some of their wealth in places elsewhere, in real estate elsewhere. But they don't want to own something, then deal with taxes, etc. They want fractionalized ownership. Anyway, I can go on like this. There is all sorts. Corporate debt. This is also very, very interesting. Financial instruments of different kinds. Corporate debt is a huge, huge area. There's trillions of it, and
it's something we've been hearing. Something we've been hearing a lot about lately. That we keep hearing about it, but it's not something most people even need to know about, because what will you do with that information?
Well, yeah, that's true. That is true. What would you do with that information? A lot, it turns out. I have a funny story.
You're not going to buy it. You're not going to sell it.
So about 12 years ago. So I live in this hodunk town in upstate New York, where Cornell University is, right? Ithaca, New York. About 12 years ago, I wanted to buy. So remember the 12 years ago, right? So in the U.S., your bank account was giving you like 2% or 1.5% interest rate. So I go to my bank and I say, look, you guys are giving me 1.5%. And I know that Putin is selling bonds, sovereign bonds, at 14%. I want to finance Putin. Okay, so I want to buy Russian bonds. And they say, sounds like you want to do something pretty fancy. I'm like, no, this is not fancy. This is pretty straightforward. I'm like, well, you're going to have to talk to the investment advisor. I'm like, okay, who is he? His name is Ralph. Okay, where's Ralph? Well, Ralph only comes in on Tuesdays and Thursdays. I'm like, okay, I'll come back on a Thursday. So I come back on a Thursday. Ralph is this older gentleman. He's really portly, he's been around for some time, and he talks very slowly. And so I explained my situation to Ralph, and he goes, sounds like you want to invest in junk bonds. Can I interest you in GM? And I was like, no, GM. Dude, GM manufactures coffins on wheels, whereas Putin has nukes. I want to invest in the guy with nukes. I bet he just defaulted, but he's not going to default again. I want to invest. And I just couldn't do it. It was not possible. It's just insane that in 2000, whatever the hell that was, I couldn't buy. It's like I just wanted a fractionalized. These sovereign bonds are about $1 million per coupon, right? I didn't have $1 million, of course, and so I needed to get a fraction of it. But there was no way. So they lacked reach, and there are a lot of financial products of this kind that lack reach. So we want to be the entity that allows them to be digitized, that allows them to be sold, bought, and so forth. And we want to be the full-scale solution for them, not just for issuing the assets, but also for trading these assets on DEXs and doing so in a compliant manner. So that's the AVA Labs path to profitability.
And then, the most important question is always, when mainnet?
When mainnet, as soon as it's ready. And I was hoping, so I think our public stance is June 2nd. And so I would love to stick to that. I think the virus situation has put a dent in everyone's plans. You don't want to go mainnet when the world has tanked, but the world hasn't tanked. I don't think this virus situation is a huge kick in the gut. It is a kick. It's a kick in the gut of a certain kind. But we're gonna recover from it. It's like 9/11. It is not like a giant world depression. So I think June is what we're targeting, and I think, Andreas, it's hard to really explain this, but we are itching to go. I've been around for however long. This whole area has been around, what, 10 and a half years, right? And so I'm sick and tired of hearing noise after noise after noise about crappy little things that people have. And there is no shortage of people trying to make a quick buck. There's no shortage of people pushing technically flawed ideas. And there's no shortage of people coming up with some dinky little thing that they dress up and serve to the masses. And we've got a much better foundation, totally different consensus protocol, is far faster. And in addition to that, we have a different legal infrastructure. When we talk to Wall Street firms, they're like, yes, all I wanted was control my validator set. I want to control the externalities. I want to control those things that I can't express in code. Well, the only way to do that is by controlling the validators. So that's what we want to go after. And then, of course, comes the things on top. We want to partner with existing people whenever there are people who are serving a useful function. So there are many of these in the ETH space where people are doing something interesting. And we'd like to partner with them and have them run on top of AVA. To that end, we implemented the entirety of the EVM in AVA. So you can take your Ethereum smart contract and deploy it on AVA, and it's byte by byte compatible. It's the exact same code. It just runs. And let's see. So that's what we're trying to do. It's an exciting time. As I said, we're driven. We want to get to market fast. And we want to get to market fast because there's stuff to come afterwards that I'm so excited about that relies on the underlying platform. So I'm itching to go. My whole team is itching to go. And I'm sure they're going to listen to this and they're like, yeah, let's get out there. That's the feeling in the lab. And we're all dying to go out soon.
Well, Emin, where can we keep up to date with everything you guys are up to?
Sure. The website, avalabs.org, is the best place to keep up to date with the news coming out. My own Twitter account. So there's AVA Labs Official, the Twitter account for AVA Labs. That actually is very, very good. It's far more informal than the webpage, actually. And then there is my Twitter account, which is Elite Haxor, EL33TH4XOR. So people can follow on any one of those three forums.
Great. I was actually waiting for you to spell that one out, actually, because I was going to try and do it, but but yeah, thank you so much, Emin. It's been a pleasure. And guys, I urge you to go check out AVA and everything that is going on Avalanche.